Hello again, everyone. Thanks for tuning in and watching. John Flynn here from Flynn Real Estate in Niagara Falls, serving Southern Ontario. Here to give you my honest and professional opinion about the Canadian housing market. Today, I'm going to talk about buying versus renting, buyer's remorse, and just generally mortgage payments and whatnot. We're going to get into the brass tacks, dollars and cents is the theme of today. So we're going to start with the mortgage payments and how they differ from February until now. So let's check out how they've changed and interest rates and prices and whatnot, how they affected them. Okay, so I want to start with February. So in February we had a 2.89 fixed rate thereabouts, and I'm using a mortgage of $500,000, and it would have cost you $2,338 approximately for that mortgage. Today, we've lost about 10% in Ontario. Other places are higher, other places are lower, but on average, let's call it 10%. But the interest rates are higher. And many people make a good point to say, well, interest rates are higher, so it's going to cost you more now. It would have been better to buy previously. And it does hold merit. So let's look at that. So nowadays, say we've lost 10%, so our mortgage is only going to be $450,000, but we're at a 4.5% 5-year fixed rate mortgage. And of course, it's $150 more. So if you're looking at payments, I like to look at payments, and most people do. Your payment's higher right now because house prices haven't declined enough to catch up with the rising mortgage rates. There's obviously a couple of reasons we haven't caught up to the price declines when it comes to mortgage payments and higher interest rates. It's one, there is a lag because of outstanding pre-approvals, 60, 90-day hold periods on those pre-approvals. And regardless, there would be a further lag just because it takes time for prices to filter or to factor in to the higher interest rates. So again, just another thing to think about. Right now, yes, house prices have declined, but again, in my opinion, they're going to keep declining and they will catch up with the interest rates. And of course, there are more interest rates looming. So just keep that into consideration. So next, I want to get into renting versus buying in a declining market, right? This doesn't apply to the long term. In the long term, I say buy a house. It's better to own a house. It's yours. You're going to gain equity. Now, there are economists that go through and say, well, over 25 years, it might be better to rent. I don't believe that. I still think buying's the best thing. But in a declining market, it can be risky. And I just want to show you the difference between a 1-year term to say, should I buy now? Or should I wait a year in a declining market? And if it does decline, what it looks like. And I believe that we are entering into, or we're going to keep continuing in the declining market. Again, this is more for people entering the market, not for people who want to move. They need a bigger house, smaller house, downsize, retire, whatever it is. This is for people who are not in the market and they have a choice. Should I rent or should I buy? Ultimately, you should probably keep living in your parents' basement and save your money for a year or two, or whenever the market reaches the bottom and starts to rebound. But regardless, a lot of people don't have that option. They need to rent or they need to buy a place. So let's check out the differences. Okay, so scenario one, most likely not a first-time buyer, and this is I'm using data from my region because it's just more accurate and I can give a better perspective on it. Okay, so first we have the initial cost. So to buy, you're obviously on this is based on an $840,000 home, which is our average residential property price right now in the region. Down payment, a 20% down payment, so you're avoiding all that CMHC and mortgage insurance and whatnot. So the initial down payment would be 20%, so you have a nice down payment. And of course, closing costs, land transfer tax, you're $185,000 initial cost. And of course, for renting, it's first and last, which you can't consider an upfront cost because it's actually going to 2 months of rent. So that's really no cost besides your first and last, but it is being allocated towards the right thing. Then your monthly payment. It's actually costs more to own a house right now than it costs to rent. So right now, including your property taxes and your insurance, your house insurance, the house insurance is more to own than it is to rent a place. So it's $3,855 a month. And for renting, this is probably on the high end of renting. You could probably get a house for $2,800, but I wanted to go a little higher just to make sure you had good options. $3,000 plus $50 insurance, so $3,050. Then you get into maintenance for owning a home. I put $5,000 a year. Some could argue it's more or less. Some people argue it's 1%. This is less than 1%. So $5,000, and even for renting, you're going to have to maintain a house. So $1,000 in there. You have to do certain things, and you're going to, maybe get your own blinds or whatnot. So buying, you're going to have a credit. You're going to have $16,542 in principal credited towards you. That's equity now that you've put towards your own life or your own net worth. And of course, renting, you have zero principal. It's lost money, as people would say. After a year of a declining market, remember, this is a declining market. Obviously, if I did an increasing market, it's going to look a whole lot more attractive to buy, but this is a declining market. 10% decline. Remember, now we've done 10% in 3 months right now. So I'm talking about 10% over the next year, which is very achievable. And look, based on my predictions, it will happen and more. But regardless, let's go with 10%. $84,000, 10% of the house value is gone. And with renting, I put in an 8% loss due to inflation, which you can't really say because house prices won't be inflating. So technically you won't actually have to pay that 8%, but let's just call it an 8% because of bad investments, whatever. You're going to take a loss due to inflation, higher cost of living, or who knows. $13,000. At the end of the day, the net cost for the year after 1 year in a bad market of owning a property is $118,718. Renting costs you about $51,000. That's with your inflation losses too. So you can see 2.5 times more expensive to own a house in the first year of a declining market. Now you will get that back over time, but if you had waited a year to buy, you would have avoided all those losses, just like entering a stock, right? You enter at the right time, you see it's on a downtrend. Are you really gonna put in 200,000 into the Dow Jones right now, knowing it's on a downturn? Probably not. So this is the same thing here. Okay, scenario two. Scenario two is, again, after 1 year in a declining market, you bought a home or you rented a home, either one. And again, Niagara region, starter home, first time buyer, whatever you want to call it, $550,000. Yes, you could still get a home for $550,000, and it's getting easier actually in this market. So 10% down, and your initial costs are $61,000 with closing costs, and you're going to get your land transfer tax credit and whatever. I've worked it out. $61,000 initial cost. Of course, renting, no initial cost besides your first and last. Monthly payment, $31.25, including your tax and insurance. And renting is a lot cheaper regardless with no investment, which is, and I didn't realize this until I made this video and until I made this table. $22.50, including your renter's insurance. Maintenance, again, less maintenance on a first-time buyer's home, $3,000, and renting $750. You're going to have some odds and ends to buy. Principal, you're going to pay off $11,373 in principal, and you're getting nothing renting. You're going to lose $55,000 due to the decline in the market of 10%, and you're going to lose $4,400 due to inflation if you're renting. So at the end of the day, it's going to cost you $84,000 to own in a declining market with a 10% reduction in home prices. It's going to cost you $32,000 to rent with some losses to inflation, which probably won't happen if it's declining because the dollar is actually getting stronger in those markets. But anyway, so again, 2.5 times. So when you buy in a market that's declining, there's risks involved, right? But people say, well, it doesn't matter. I want to own a house. It's still just as cheap to own it every month instead of renting, and my money's going nowhere. Well, as you can see here, it actually is cheaper regardless if you look at the net cost at the end of the day to rent. There's no initial upfront payments, and you're taking all that risk out knowing that we're trending down. So you're better off to wait if you're entering the market. If you already own, that's a different story. But again, to enter the market at a high point, you should watch and wait, in my opinion. To back up my theory, you're starting to see some news reports and some stories of buyer remorse. And if you watch the news or if you see it on your Facebook feed or whatnot, you'll see some starting to trickle in. And it's true. You buy a house, and it's happened in 2018, and it's happening again now. You buy a house, By the time it closes, so we're not even talking a year later, like in my examples, this is a year. This happened in 3 months, they lost 10%. So, and of course there's buyer's remorse, and now you have to close on this house. So now here are some early stages news reports from things like this happening. Here's one, CP24 on May 18th. Actually, I noticed the author was the same as the other one, so I think it's the same article, but they reported it differently. Worry, buyer's remorse high as real estate market slowdown materializes. And then you have Global, same author, same day, but they changed it up a bit. Got home buyer's remorse, regret sets in for some as heated housing markets cool. Here was the first story I saw, and the last one I'm going to show you today. Bought a house when the market was hot and now regret it? You're not alone. Cooling prices are doing more than giving new owners buyer's remorse. In some cases, it's costing them a lot of money. And again, links in the description for this. It actually blocked me because it wants my subscription, which I don't have, to the Toronto Star. But this story is actually about a real estate agent in Toronto. And he bought in March at the height of the market. Maybe it was February, but it says March, but I think February was the height. But anyway, he bought near the peak. Harry Sarveda knows how recent home buyers are feeling now that prices are dropping. He was tired of waiting for a break in Toronto's hot pandemic market. The real estate broker, he bought a 4-bedroom bungalow in March. He paid $1.285, so $1,285,000 for this house. He hasn't even closed yet. It's not closing till June, and it's worth 1.1. He's taken like a 15% hit and it hasn't even closed, and he's waiting. And just think, by the time it closes in June, is it going to be worth $1 million? It'll probably still be worth over $1 million. But again, this guy's a real estate broker, and he's stuck in this situation. I've heard stories from other agents and lawyers that they're getting calls weekly, daily about people. What do I do? I don't want to close, or I can't close. Sometimes they can't close. They haven't sold their house. Yeah, other people have bought homes. Now their houses are sitting on the market. So the situation isn't getting better. So I can confidently say that if you do buy, you are buying in a declining market. And if you're entering the market, again, not if you're in it already, but if you're in it, you got to do it. You got to be careful, and you got to make sure you sell first and then buy. Don't just go buy a house and think yours is going to sell in a week or a month. But if you're entering the market, you're better off waiting. It could be 3 months, it could be 6 months, it could be a year, but even monthly, it's still cheaper to rent with the higher interest rates that have just come in and the prices that are declining but haven't caught up to those higher interest rates to even equalize your payment, as shown before. So be very careful. Don't jump in just because you think there's an opening. Prices are not trending up. If you watch these videos, I'll let you know if prices start trending up, because I'm obviously very truthful and very on top of things. But they're trending down. The numbers show, and again, these you can scrutinize these numbers, but they're just basic numbers. They show that it is cheaper to rent monthly, and it's cheaper to rent after a year. And I'm not talking to rent for the rest of your life. Like I said, I think owning a house is a great personal choice. It will pay for itself, and you will have equity and net worth, but not if you enter. You don't want to be starting upside down in your deal. You don't want to be upside down after a year, let alone after 2-3 months when it goes to close and the house is worth less. So make sure you enter at the right time, which again, I don't believe now is the right time, and do the right thing. Look at the numbers. It's very simple, basic math. Rent now, wait for the market to bottom or close to bottom, and then buy. And you'll be in a good position, and you can enjoy your house instead of hating it from the time you move in. Anyway, that's my opinion. Hope you got some value out of this video today. Like, subscribe, share if you did. And until next time, have a good day.